Hello everybody, welcome back to another IC Markets Global webinar. Alright, today we will be going through the Build Your Trading Strategy series part 1 out of 3, which is scalping. Alright, so let's wait for a couple of minutes before we begin the session, right? Because we will we want the attendees to come in first before we start the session. All right, so let's wait for a couple of minutes, about 1 to 2 more minutes before we begin the session. Hello Ajay, nice to meet you again. We went through the live trading analysis yesterday, I think, right? Okay, just to make sure you guys can hear me and see my screen. All right. Yes, nice to meet you again, Ajay. Okay, I think 1 more minute before we can begin the session. Yes, okay, nice. Sound is clear. I think from my side everything looks fine. Okay, so let's begin the webinar. All right, so before I begin the webinar, remember that everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. All right, so please remember to do your own due diligence before you guys trade. All right. Good day to you too, Jamilu. Nice to see you again. Alright, so the agenda for today will be number one, what is scalping, right? Number two, examples of scalping trades. Number three, how much technicals should you use while scalping? Alright, number four, how much fundamentals should you use, right? Then the last two is building your scalping strategy as well as putting it into practice. Alright, so I'm your host for today. My name is Woon Hong and I'll be going through today's scalping webinar with you guys. Alright. Okay, so the front part will be a little bit more wordy, so bear with me for a bit because I will need to explain what is scalping and make sure that you guys understand what is scalping in general so that you will be able to have a clearer idea of how to scalp the markets in the future. Alright. Okay, so firstly, what is scalping? Scalping is basically a fast-paced and exciting um, way of trading, right? Compared to swing trading, right? Because swing trading is more of you're entering a trade and then you set and forget, right? Maybe in about 1 or 2 days or so, right? You will just wait for the markets to hit your take profit, right? Yeah, but for scalping, it is short time periods between the opening and closing of a trade, right? And we are actually grabbing just very small amount of pips, right? And also risking very small amount of pips. So usually, when people scalp, they usually go for 1:2, right? Or some people that has that are willing to risk more, right? And they are more ambitious, they will usually go for 1:3, 1:5, that kind of thing, right? I'm not sure if you guys saw trades like ICT, right? Those are more of scalping, right? They're looking at smaller time frames to trade the markets, right? And this is done during, for example, London session or New York session, or sometimes even Asian session, right? Because we want to take advantage of the market volatility. Okay, so typical timeframes that are used for entering trades will be 1 minute, 3 minute, or 5 minutes, right? These are very, very small time frames. I know of some people that even use like 30 seconds, that kind of thing, right? Which is very for me, I wouldn't really use something like 1 minute or 30 seconds because it's very um like your heart will beat very fast, right? I'm not sure if you guys have actually tried scalping on the 1 minute time frame, right? Your heart will once you see the candles moving fast, too fast, right? You'll see you'll see how your heart actually beats very, very fast, right? Then for the analysis, right, you can use either 15 minutes or 30 minutes, right? Okay, so the next thing is some people ask, why scalp, right? If it's so volatile, why would you want to do scalping, right? So the most important thing is, I'm not sure if you guys have heard of this thing whereby if every day you compound your account by achieving 20 pips every day, right? Starting from like as low as $50, right? And then you are aiming for 20 pips every day, right? I think by the end of um 30 days, right? 30 successful trades, assuming that you have a 90 to 100% win rate, right? Just going for that 20 pips, you will have scaled your account by at least 300% from $50, right? As compared to aiming for 200 pips, right? 200 pips, you will have to wait for around, let's say, 16 hours, or even 1 day, or even 2 days, right? So yeah, it depends on your risk appetite and your patience, right? For scalping, there are new opportunities every time you open a chart, right? Because you're looking at the lower time frames. Okay. Then the next thing is the most important thing that people always ask: how much time do you actually need to scalp, right? The holding time can be as low as 10 seconds, 30 seconds, right? Sometimes because you're trading during London session, you're trading during news, right? You can see the engulfing candles, right? So it can either hit your stop loss, or it can either hit your take profit very, very fast, right? But sometimes for um, non-volatile periods, like for example Asian timing, or um, timings that are not doing peak hours, right? You will need probably a few hours, right, while scalping. So yeah, you see right here, 1 hour in the morning, 1 hour in the afternoon, and 1 hour in the evening, right? You don't have to look at the charts every single time in order to scalp, right? You can just dedicate 1 to 2 hours in the morning, afternoon, or evening, right? Depending on which is more suitable for you, right? Morning is Asian timing, right? Later on, I'll show you guys a tool on how you can identify um, these peak periods, right? Asian session, London session, and also New York session. Okay, then it is important to have proper risk management so you don't need to monitor the trades all the way. Okay, so for this time period, let me just show you guys. Let's use let's just use GBP USD. Okay, so sessions. Okay, so you can filter this, right? You can put what you want. Line fills. Okay, so you can see if you use this tool on TradingView, you can see we have blue is Asian session, right? And then we have London session, and then we have New York session, right? So wait, let me just adjust this a little bit. Tokyo. Okay, London will be London will be 2:30 to 5. New York is oh, wait, let me see. Let me do this a little bit. Let me change my time zone. Okay, 8 a.m. to 1 p.m. Okay, I got it. Okay, I think this is fine, right? So this is how you put your training sessions, right? Just you can just use the indicator, right? And then you can put in the trading sessions indicator right here. All right. This might be a little bit confusing, right? But there is another way, is that you can go to baby pips, right? And then you search for trading sessions, right? Then they will show you the different trading sessions right there, right? Sometimes the indicator is not very reliable, so I would use oh, spell it wrongly, baby pips. Right, you can use baby pips to look at the training sessions. All right, so yeah, let's just remove this. Okay, going back to the slide. Okay, next thing next thing is, how much leverage do you actually need to scalp, right? You can always start with the lowest amount of leverage when starting out, right, which is 1:10, right? I've seen people scalp with at least 1:500 or 1:1000, right? But sometimes that is because they want to have enough margin, right, to trade with. They don't want to be margin called too fast, right? Because sometimes when you scalp, you want some people will want to have a lot of layers, right? Okay, then the next thing is you want to gradually increase your leverage as you record a higher win rate and gain more confidence, right? So as you have higher leverage, right, you will have um, more you have more confidence, because price will be more relatively more volatile, and then you can capture um, these trades, right? Okay, then the next thing is, how much capital do you actually need to scalp, right? A good amount to start with would be actually about $300 to $500, right? But we will use the example of $500, right? And you are risking only 2% of your capital on each trade, right? Some people, because we are trading with a real account, right, you can risk 2% of your capital. Some people that trade with, for example, prop firm, right, they cannot risk that much. They would usually risk about 0.5 or only 1% of their capital. But in this case, we are trading with real account, right? So risk about 2 to 3% of your capital on each individual trade. And then if you can do it with $250, then you can do it with 2.5k and 5k, right? Do not rush into scaling up, right? Some people will usually tend to enter a lot of trades because they are rushing to scale up their account, right? But the most important thing is to have proper risk management, right? If you look right here, okay, for capital, right, $500, you are risking 2%, right, which is $10, right? If you are using micro lot, you are aiming for 100 pips, mini lot 10 pips, standard lot 1 pips. Okay, so I would suggest to calculate properly, right? Only risking 2% per trade, right? Later on, I'll show you guys how you can calculate when you're scalping very fast with MT5, right? You can use MT5 for adjusting your stop loss and take profit, and also looking at your risk percentage. All right. Okay, so these are three powerful scalping strategies, right? Firstly, we have the horizontal pullback strategy. Second, we have Fibonacci retracement strategy. And third, we have the Nike tick strategy. All right. Okay, so the first thing is bullish reversal, right? This is a horizontal pullback strategy. We are expecting for price to come back to this area because previously it was acting as a resistance, but now you can see how price actually broke past this resistance, and now we are looking at how price could potentially fall back to this area as a support now to go even higher, right? Very simple breakout strategy. Okay, then the next thing is horizontal pullback strategy for bearish reversal, right? It was once acting as a support, right? Price broke through the support. Once you break through the support, it's now acting as a resistance, right? So we are waiting for price to come back up to this resistance level to fall even lower. Okay, so you can combine horizontal pullback strategy with Ichimoku clock, right? We have marked this area as a resistance area, so we are waiting for price to actually come back up to this resistance area to fall even lower, right? Because if you look at market structure right now, previously price was acting bullish, right? We have higher highs, higher lows, higher highs, right? Right now price is creating lower lows, lower highs, low lows, right? What we are expecting next is price to create a lower high to form a lower low. Okay, so it's pretty straightforward, and you can see right here, combining it with Ichimoku cloud, the Ichimoku cloud has become bearish already, right? So we are now bearish, right? Because the Ichimoku cloud is an indicator that tells you when price might be bullish or when price might be bearish, right? But combining it together has a stronger confluence. All right, so you can see right here, price actually reacted to this resistance, and we are waiting for it to fall even lower right here. All right, which is a bearish reversal. Okay, then the next thing is, what about Fibo retracement strategy, right? As for those of you that have already gone through Fibo retracement strategy, right, it's pretty simple, because you can see right here, these swing highs and swing lows are too insignificant, and they are bad to use for Fibo retracement points, right? You can see how they are very close to each other, right? Looking right at it, you can tell that you can't really draw proper swing highs and swing lows. Okay, so how to draw proper swing highs and swing lows, right? You can look at it and visualize straight away that these are your peaks and these are your lows, right? You can tell right away that these swing highs and swing lows are significant enough. All right, so this is how you practice and learn how to draw your Fibo retracement strategies. Okay, so another thing that you have to take note is that you can see how you shouldn't draw from this swing low to this swing high. Why? Because this Fibo trend line is cutting through price structure, and we wouldn't want that, because through a lot of testing we know that if you draw from this swing high, this swing low to this swing high, right, price wouldn't actually react properly because you are cutting through price structure, right? So yeah, you shouldn't draw this kind of Fibo trend line, right? This is to make sure that you understand how to draw proper Fibo trend line, right? So from this swing high to this swing low, right, you can see this is a proper Fibo trend line, right? There's no cutting through of price structure, right? Very nicely. This is a very significant swing high and swing low right here. Okay, so far so good. Okay, so combining Fibo retracement as well as pullback, right? If you draw from this swing high to this swing low, we can see that we have a 61.8% Fibo retracement level, which actually aligns with the pullback level that we have marked out, right? Because price was once a support that has been reacted at least twice, right? So we are waiting for price to go up to this level, acting as a resistance. Okay, so combining this pullback resistance level and the 61.8% Fibo retracement level, we are expecting for price to fall off from this resistance level over here, right? Which is what price actually did. Okay, which is how price actually reacted to this level, and then reacting and then your TP should be at a valid level where this is what we call obstacles, right? This is a overlap support level, so you can see how price actually came down all the way to this level and then bounce up from here. Okay, then the next thing is Fibo retracement plus pullback plus Ichimoku clock, right? Combining everything together, right? To have more confluence. Okay, so we have this trend line, right? I know some people don't really use trend lines because trend lines are kind of subjective, right? So don't depend on trend line too much, right? Use it only as a extra confirmation, right? So we have a bearish Ichimoku cloud, okay? Then we have a bearish trend line, okay? Then we mark out our swing high to the swing low over here. Then we can see price might actually react to the 38.2% Fibo retracement level, which aligns with the trend line as well as the combining it with the Ichimoku cloud. So you can see right here, price actually reacted off this 38.2% Fibo retracement level, right, which is this swing high over here, which is also at the bearish trend line. And then one secret thing that most people don't know is that for stochastic, right, if you draw out your stochastic levels, you can see each time price drops reaches the 99 stochastic level, right, which is a indication of sells, right, and then you align it with the swing high level, you can see how price actually reacted off there, right? And then the second time that price actually reacted here, it fell off from here. So you mark out your stochastic resistance level. This is your hidden stochastic resistance level. So you mark it out. Next time price comes back to this level, you just make a sell over here. Stochastic hidden resistance, 38.2% Fibo retracement level, Ichimoku cloud, bearish Ichimoku cloud, right? And then your bearish trend line. All these confluences together makes a good trade. Can we use RSI also? Yes. Yes, but through my testing, I realized that stochastic is better for these hidden resistance or hidden support levels. You can do your back testing with RSI as well, but In my opinion, stochastic is better in a sense that it is more reliable, right? RSI is okay in a sense, right? But for hidden resistance and support, I feel that stochastic is a more reliable tool rather than RSI, right? A lot of people don't really know this hidden resistance and support level, but you can definitely test it out with RSI also, see which one works best for you. Okay, I think in the case of RSI, right, RJ, if it is very oversold or very overbought, and then you mark out your same thing, you just mark out your hidden resistance and your hidden support levels. Okay, then you can see how it might work out for you. Then you can add it to your trading strategy. Which time frame we use 1 hour? Okay, so since we are scalping, right? This is just a visualization, okay? But you can definitely use 1 hour for direction if you are scalping, okay? 1 hour for direction, 15 minutes for marking out of key levels, and then your entries can be 5 minutes, right? Um, 1 hour for direction is because we want to see where price might actually lead to within the next hour, right? Then 15 minutes for marking out your key levels, and then 5 minutes for your entries. Because for scalping, right, you wouldn't want to hold your trade for too long, right? You're actually gathering about 20 to um, 30 pips, that kind of thing, right? So you're actually scalping, in a sense, it's more of sniping the markets, right? So if you have more time on your hands, then you can do scalping, right? But for those that don't really have more time on their hands, I would recommend to do day trading, right? Or even swing trading. Okay, I hope that answers your question, Ajay. Okay, let me show you guys the last trading strategy before we hop on to trading view. All right, so for the Nike trading strategy, right, the Nike tick, right, I'm sure you guys might already know about the Fibo points, right? So your starting point is this swing high, and then your ending point is this swing low. All right, then you also have your negative Fibo retracement levels, right, which are your 27.2% as well as the negative 61.8%. All right, then you have your extension levels, which are your 127.2% as well as the 161.8%. Sorry, excuse me. Okay, so for a starting point, you are drawing from this swing high to this swing low over here. All right, and price has already crossed your starting point. So once price has crossed your starting point, then this is the important part. Always look out for a V shape between your first starting point, second ending point, and then your projected level. So you are technically trying to use the 127.2% extension level as well as the 161.8% extension level, right? Because these are levels that are very strong, right? And price will most likely reject from there. Okay, you can see how price rejected this 161.8% Fibo extension level to reverse all the way to the downside, right? This is called your Nike tick strategy. And you can see this can be done on the 15-minute time frame, right? Or for the euro dollar pair, right? You can see 15-minute time frame, right? This is the analysis. We are looking at a Nike tick strategy, right? For it to react to 161.8% Fibo extension level. So right here, you can see this GIF, right? Starting point, ending point. then you mark out your extension level, right? We are only using the 127.2% as well as 161.8%. Watch out for the reactions. You can see, firstly, it reacted to the 127.2%, right? But after that, it actually reacted to the 161.8% level instead, right? Okay, so yeah, let me show you guys. Okay, let me show you guys a real example, right? I think it would be better if I can show you guys a proper example. Okay, let's go to 15 minutes. Okay, so let me show you guys my personal, apart from all this, right? Let me show you guys my personal strategy on how I actually trade scalp. Okay, so for the H1, right? Let's say we are looking at let me see a potential setup. Okay, let's see. Right here, let me see, 15 minutes. Okay, this is for EU, right? Let's take current price. Okay, let's take current price, right? Firstly, what I will do is to identify on H1, right? Let me look at H1, right? H1, we are expecting a push higher, right? We are expecting a push higher. Okay, so let me just go to 15 minutes. So the direction, what we want to do is to buy, right? So 15 minutes. Okay, 15 minutes, we are expecting for price. You can see how price is going down right now, right? So let's see, what I would do is to mark out a fib level. Let me see. Uh, 61.8. Okay, this level right here. Wait, let me see, 61.8. Yeah, I am hoping to see if price will be able to bounce off from here, right? Let's see if price will be able to bounce off from this pullback support level, as well as the aligning it with the 61.8% Fibo retracement level. And not to mention, we have a fair value gap over here. But let's see how this might play out. So from here, you will go to 15 minutes. Oh, sorry, 5 minutes. Right? So you'll go to 5 minutes and see if price will react to this level, right? Whether it will close within this area. If it continues to fall, right, then we wouldn't enter the trade, right? Because it doesn't really make sense for us to enter the trade, right? You can see how price is actually falling, right? So this will be invalidated, right? We should see how the next 15-minute candle close. Okay, if it actually closes within this level, okay, then I will enter a trade. Right, risking 11 pips to aim for about roughly 20 pips, right? But for this trade, I believe it wouldn't. You can see how price is moving pretty strongly right now, so it's invalidated. Okay, so the next thing is we want to take a look at any other trades. Okay, so for GU, I think GU has more potential, right? This level, okay, this level is a nice level. Let's see, it's a nice FVG. Let's see if it actually aligns with the, yep, definitely. So what I will do, once I see price, there's a fair value gap over here, price have an internal break of structure, right? Possibly doing something like this, right? React to this level. Oh, possibly reacting to this 71% and then going higher. Okay, let's see how many pips is this. Okay, I think it's fine, right? We want to go for a 1:2. This is, we are risking 10 pips to earn 25 pips. I think it's very doable. So let's see if price will actually react to this level over here. Okay, this is one of the setups. So you're looking at internal break of structure. Second thing is we have a feeble retracement level that aligns with the fair value gap. All right, and then let's see H1. H1 not extremely clear, right? Oh, you can see how price. Let's watch how price actually reacts to this level, right? You can see how it tapped my 71% level, which is within this fair value gap and is showing some sort of reaction. Then let's go to 5 minutes. Okay, 5 minutes is actually reacting to this small level of pullback support level over here. Okay, let's wait for a couple of minutes and let's see how price might work out from here. Okay, anyways, it's only 10 pips, right? So if you are risking 10 pips, okay, let me mark it up for you guys. 2% of 500 equals $10. Okay, so if you lose this trade, right, you have lost $10. Okay, so 10 pips. Yeah, so if you look into MetaTrader, right, if you go into IC Markets Broker, right, you can actually adjust, you can actually see how much you are risking, right? So let's say you want to enter this trade, you put your stop loss at 1.29025, right, and then your TP at 1.29378. But of course, right, these are just examples. Don't enter these trades, right? I'm just showing you guys scalping examples, how you can actually use different methods to scalp. Okay, yeah. So let's wait for a few more minutes and see how this might actually react, right? Because we are not back testing, we are using real market live example, right? Because I want you guys to actually see it, right? See if it actually works, and then you can use it for yourself, right? Right? If you agree, if you watch all those YouTube videos and stuff like that, right? It's not exactly they're teaching you a concept, but doing a lot of they're showing a lot of past trades. But past trades don't equate to future trades, right? The market might not react the same. Okay, so I want you guys to see whether how it works in real life, right? And see how it might be actually useful for you. Okay, let's wait for this candle closure. It will be good if this 5-minute candle, right, closes above this level, right? We have already created a bottom wick over here. So what we are looking at is for the 5-minute candle to push upwards, closing above. Okay. So when you're scalping on the 1 minute or 5 minute, right? Always look out for candle closures, right? What you are looking at is you want, let's say you have marked out a zone, you want price to close above that zone, and then it gives you that confidence that okay, price would most likely go up from here, right? You can see how price is actually, I'm not sure if it's too small, but you can see how price is actually fluctuating here, right? Going up, going down, right? If 5 minutes candle closes below, right, then we wouldn't want to enter this trade. Okay, let's just wait. So this is more of how you can utilize understanding how price uh, structure works, right? Then you will know how to scalp even better. Okay, so far so good. If you guys have any questions, please type it in the chat so that I can answer your questions. Okay, any other validation? Yes. Okay, so a good question, Ajay, right? Any other validation to confirm? Um, in my opinion, right? Candle price action is very important, right? But you don't want to confuse it too much with season. Yeah. Sorry, Jamilo, I don't understand what is season. But for RJ, right, any other validation, right, you don't want to have too many things in your trading strategy for scalping, right? Sometimes it might actually contradict your whole setup. So I would suggest keep it to maybe three rules, right? Three steps will be good, right? You can see what we are looking for is price to close above this area that we have marked out, right? This 15-minute fair value gap, right? You can see the big wick right here. That's why we have marked this area out, and then it aligns with the 71% Fibo retracement level. So that's why I'm pretty confident about this trade. Yeah, you can see the next candle open bullish above, right? So this is a good sign. Okay. Um, Jamilu, sorry, I don't understand what you mean by are you applying season? Can you type in the chat what do you mean by are you what do you mean by that so that I can answer your question? Season as in like session timing or wow, we have a very 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 nice reaction over here, right? Yeah, so this is yeah, so we can see how this scalping strategy actually works pretty well, right? I would say we have already run about almost 1:1 because our stop loss is 10 pips, we are in profit of 10 pips, right? Ultimately for this scalping strategy I will just aim to target the previous swing high, right? Keep it simple, target the previous swing high or slightly below, right? Somewhere about here, at least get that 1:2, right? Okay, now let's see. Yeah, USD JPY. I think USD JPY would be a good opportunity as well. Let me see. Oh, okay. I can see straight away. Okay, fair value gap aligning with 71%. Okay, market structure wise on 15 minutes, lower low, lower high, lower low, lower highs, right? But created a lower low, what's next? Reacting to a lower high to create a lower low. Okay, hopefully price comes up here to go even lower. All right, so this is essentially what we are looking at. Which time zone? Oh yes, okay, so I for myself, usually I trade London and New York. I try to avoid Asian sessions because I don't really like Asian sessions. Sometimes London is tough as well because we got London manipulation, right? But don't worry. What I would usually for myself, I usually trade London and New York. Right now it's not within session timing, right? But yeah, you can see how price actually might not work out when it's not doing session timing, right? Price is very slow when it's not doing session. Okay, so let's look at UJ, right? Price might actually react to this level right here at about 149.62. Okay, because we have direction wise we are bearish for 15 minutes, right? You can see 71% level as well as bearish fair value gap. Okay, so price has created a lower low. What we can expect next is a lower high to create another lower low. All right, so let me see if it's worth entering this trade. I think it's pretty worth. Okay, stop loss about 10 pips, take profit about 23 pips, right? This is how we scalp. 1:2 risk to reward ratio. So if you risk 2%, you actually hit this, you are earning about 4.2%, right? Okay, so all this is actually pretty simple, right? Once you get a hang of it, right, you can see how it actually works out, how it might actually work out in your favor. All right, let me see. Let me see. UCAT, USDCHF, UCAT. Okay, another trade for UCAT would be, this will be a slightly riskier trade, right? This will be a slightly riskier trade. Okay, this might be a slightly risky trade. Right, let's see if it makes sense to enter this trade. Stop loss 10 pips, 11 pips, take profit 25 pips. Okay, same thing. This, why is UCAT a riskier trade, right? Because we don't really know the direction of UCAT, right? It looks very bullish, right? It has actually reacted to a major level of resistance right now, right? This is a strong level of resistance right here, right? And price has marked out a low right here, has taken out these lows, all these lows, right? So there is a possibility that price might continue even lower right here as correction, right? Because price has been very bullish for quite some time, right? Yeah, so what we are looking at is actually for price to react to this level and fall even lower, right? Because we have taken out these lows, right? Price has reacted to this major level of resistance. Okay, then we have 71% feeble retracement level as well as the bearish fair value gap. Okay, so what we are looking at is for price to react to this level at 1.4393. Okay, let's see. You can use it on demo account or something, right? You can test this strategy out, right? Pretty simple, right? It uses H1 market structure. It uses 15 minutes fair value gap, and it uses 15-minute Fibo retracement levels. And then for 5-minute wise, right, what you want to see is for price to close within this key level that we have marked out. So once price close within this key level that we have marked out on the 5-minute time frame, okay, imagine price closing within here, closing below, then you can enter the trade for price to even go lower. Okay, so far so good. All right, we have covered all the this strategy is very useful, and we have covered this whole topic already. So if you guys, let me wait for maybe a couple of minutes before I end the session, because you guys might have some other questions. But if you don't have any other questions, right, then I will end off the session, because we have already covered everything for scalping. Okay, this is for building your own scalping trading strategy, right? This is a very useful trading strategy that I use personally, right? When I scalp on 15 minutes, as well as you can use it for day trading as well. Don't not necessarily only for scalping, right? Day trading is fine as well too. All right. Thank you, appreciate it, Ajay. And I definitely appreciate you guys for always tuning into these webinars, especially like live trading or educational webinars, because it is no worries, because it is, I know it might be it might sometimes, you guys have work, you guys have your own things to do, but you actually make time to come for the webinars, which I really appreciate. And you guys are amazing, like you engage with me and ask questions, which is good, right? I like it that you guys are asking questions. All right, so you're welcome, everyone, right? Thank you for joining into today's webinar. I hope that you guys stay safe and trade safe. All right, so that's all for today's session. Thank you very much for tuning in, and I shall see you guys next time. Bye bye.